on the floor of the New York Stock Exchange with the CEO of the NYSE Amex Options, Steve Crutchfield, standing by here. You guys are actually back there in the sort of the second garage here on the floor. Let me ask you first of all about the structure, because it's interesting. Why would the NYSE split control or split ownership with these 7 broker-dealers rather than just keep control completely to itself?
Well, what we've done is we've created a joint venture between the largest, or I should say the fastest growing options exchange on the one hand, NYSE Amex Options. We've seen our market share over the last 2 years grow from about 6% to 14 to 15% over the last couple of months. And 7 of the largest brokerage and trading firms in the options space here on the street. We view that as being great for the exchange business because it gives the firms that control a large portion of the volume that trades on our exchange and really represent the end user, the retail investor and the institutional investor, a stake and a seat at the table in terms of guiding the direction which that business will go going forward. And from the standpoint of the firm, similarly, it allows them to have a view into how that business is run in a way that best serves them, their customers, and the investing public at large.
Steve, it's Suzanne here in the studio. What would you really say is driving interest in options? We have stock volume falling, but we have options volume nearing a record. Is it retail customers? Is it the pros? Where is the business coming from?
Suzanne, that's a great question. We've seen options volumes grow over the last 9 years, and I expect that this year will probably set a volume record for the 9th year in a row. We do see continued retail interest in the product, certainly, but I think the position that we're in on the options side that's very positive for the business is there's still a lot of room to grow because we've got some green fields out there, large institutions, asset managers. A recent survey suggested that something like 70% of institutional money managers are still not using the options product. And that's something that we think we'd like to see continue to grow and that we expect will grow in the years to come. There's just a lot of room to continue to add business there.
All right, Steve, so with growth comes more eyes from the regulators in terms of how much share. So I'm just looking here. I mean, NYSE Amex combined with the IC would control about 40% of the U.S. Options market. Won't that create some problems, regulatory problems for the deal between the New York Stock Exchange and Deutsche Boerse?
Well, I don't want to comment specifically on any regulatory issues that may arise, but what I will say is in the short term here and for the foreseeable future, we continue to operate NYSE Amex Options as a distinct business, really keeping our eye on our own customers and serving their interests and trying to grow our business and competing aggressively with the other exchanges, which does include NYSE Arca Options as well as the ISE, which, as you mentioned, is a subsidiary of the Deutsche Boerse.
Hey, Steve, but why won't you comment? We're coming off a crisis where there is increased regulatory oversight on lots of things, so that's got to factor into your thinking. I mean, what is your expectations in terms of the regulatory environment, how it might impact this?
Well, it's certainly something that as with many other portions of this deal, I'm sure is something that will be looked at. But from our point of view, we remain very focused on the day-to-day aspects of running our business and serving our customers. We continue to see growth on the NYSE Amex Options Exchange, as I mentioned. And we're an exchange also where customers always trade for free and have priority over other market participants, which is something that we think is very attractive for users of our business.
You know, I would look at that even the other way. I mean, 40% doesn't seem like very much to me. You've got a lot of competition. You've got the CBOE. We were just there this week. You've got the NASDAQ OMX. I mean, the space is getting crowded. Aren't you worried about having too little market share?
Well, as I mentioned, we do remain very focused on competition. There are 9 options exchanges now. Just a few years ago, there were 6, 7, 8. That number's been growing very, very quickly. It's a business where entrants are continually coming into the space and taking a look at, can we provide another matching platform for customers and market makers to interact? So I think that's absolutely true. We think we've got a couple of value-added propositions. I mentioned our pricing structure. The partnership model is one that we're very proud of because it gives those firms a very strong view into the way we run our business, which is ultimately in their interest. And also, we're the only exchange with a trading floor here in New York over my right shoulder in the other room.
Exactly. How do you feel about what regulators are doing here? Because a lot of guys here at the NYSE think, you know, there are too many markets out there. There are too many options. There's too many ECNs, and they can't control everything. Then we have problems like the flash crash. There need to be fewer exchanges. Do you feel the same way in the options business?
Well, a question that we get asked a lot is what's the right number of exchanges and will there be more or fewer in the future? I think we certainly always welcome the competition. Ultimately, it's good for the landscape. It builds up interest in the business and attracts more customers who bring flow into all of our exchanges. At the same time, at some point, liquidity does become fragmented, and that's something that we work very hard to try to avoid. One of the positions that we take as we structure our market is making sure the right incentives remain for market makers who are very important in the options options business to place aggressive electronic quotes on the screen for size, and that's something we keep a very close eye on as we structure our business going forward.
So 5 seconds, regulators, thumbs up or thumbs down?
What was the question?
What do you think about the regulators, the job they're doing? Is it a thumbs up, thumbs down?
Well, they've got a lot on their plates. They've had a lot on their plates over the last couple of years since the events of the flash crash with Dodd-Frank and other things. I think they're certainly making an effort to continue to make sure the businesses are structured and the markets are structured in a way that takes care of the end user as it should.
Got it. All right, Steve, thanks for joining us. Steve Crutchfield, the CEO here of the NYSE Amex.